The IRS is about to keep $1.2 billion in refunds that belong to 1.3 million Americans. And the deadline to claim your share is exactly 7 days away. On April 15th at midnight, that money stops being yours. It does not roll over, it does not get held in escrow, it does not get returned to anyone. It becomes the property of the United States Treasury by federal law, with no appeal and no exception. The IRS itself published the warning. The notice is sitting on their website right now, but almost nobody is talking about it because the people most likely to be owed this money are not the people the news covers. And there is one specific group of seniors who are almost certainly owed money from this exact pot and have no idea it exists. I will tell you exactly who they are and how much they are most likely owed before this video ends. This is a rule almost nobody outside the IRS bothers to explain. It is called the 3-year statute of limitations on refund claims, and it has been quietly emptying senior bank accounts for as long as the federal income tax has existed. Here's how it works. When you pay federal income tax, whether through a paycheck, a pension withdrawal, or a one-time withholding on an IRA distribution, the IRS holds that money until you file a return and tell them what you actually owe. If you paid more than you owed, the difference is your refund. But the IRS does not send your refund automatically. You have to file a return to claim it, and the law gives you exactly 3 years to do it. After 3 years, that money no longer belongs to you. It belongs to the Treasury. There is no extension, there is no appeal, there is no waiver. The IRS itself cannot give it back, even if they wanted to, because the law forbids it for tax year 2022. That 3-year window closes on April 15th, 2026. That is 7 days from today. This rule was not written by accident. Congress put it into the tax code in 1942, during the height of the Second World War, when the federal government needed a way to close its books cleanly each year. The argument at the time was that the Treasury could not function if it had to hold open refund claims forever. Therefore, Congress gave taxpayers exactly 3 years, and not 1 day more. The Supreme Court has upheld this rule multiple times, and the most famous case is from 1996, when a taxpayer who was hospitalized and unable to file lost his refund anyway, because the court ruled that the 3-year deadline applies regardless of medical hardship. There is no exception for sickness. There is no exception for disability. There is no exception for grief. The clock runs no matter what. But the IRS released the official numbers last month, and they are larger than almost anyone realizes. 1.3 million Americans are owed refunds for tax year 2022. The total sitting in the Treasury right now is $1.2 billion. The median refund is $686, which means half of the people on the list are owed more than that. Some are owed thousands. A few are owed tens of thousands. Therefore, the question is not whether this money exists. The IRS confirmed it. The question is, who is on the list and why? Most of them have no idea. Look at where the money is sitting right now. In California, 143,000 Americans are owed roughly $124 million. In Texas, 126,000 Americans are owed roughly $111 million. In Florida, the state with the highest concentration of seniors in the country, 89,000 Americans are owed roughly $74 million. In New York, 73,000 Americans are owed roughly $72 million. In Pennsylvania, 53,000 Americans are owed roughly $49 million. In Illinois, 51,000 Americans are owed roughly $47 million. In Ohio, 45,000 Americans are owed roughly $38 million. Every state has people on this list. The IRS publishes the breakdown by state, and every line on it represents real people who are about to lose real money in 7 days. But the abstract numbers do not capture what is actually happening. So I want you to picture a specific person. Her name is Eleanor. She is 69 years old. She lives in a 1-bedroom apartment in Phoenix. Her only regular income is her Social Security check, which is $1,740 a month. That puts her below the federal filing threshold for someone her age. So she has not filed a tax return in years. Her son told her she does not need to file, and her son is technically correct. But in February of 2022, Eleanor took a $4,200 withdrawal from a small IRA she inherited from her late husband. She used the money to fix the transmission on her car. The brokerage that held the IRA withheld $420 in federal tax automatically, because that is the default on retirement account distributions when you do not check a box telling them otherwise. That $420 is Eleanor's money. The IRS owes it back to her because her actual tax liability for that year was zero. All she has to do to claim it is file a 2022 Form 1040, but she does not know the money exists. She never got a notice. She does not check the IRS website. And in 7 days, that $420 belongs to the United States Treasury forever. Eleanor is not unusual. Eleanor is the median case. And there is a man in Ohio named Walter who is owed almost 10 times as much as Eleanor for the exact same reason. Walter is 74. He retired from a manufacturing job in 2021. In 2022, he rolled over part of his pension into a personal account, and the rollover was processed incorrectly by the plan administrator. 20% of the distribution, around $4,100, was withheld for federal tax, even though it should have gone directly into the new account. Walter never filed a return for 2022 because he assumed the rollover was clean. It was not. That $4,100 is sitting in the Treasury right now, waiting for him to file a single piece of paper. If he does not file by April 15th, the IRS keeps it. And then there is Margaret. Margaret is 72, and she lives outside Pittsburgh. Her husband passed away in 2021, and the year after he died, she finally cashed in a stack of paper savings bonds that the two of them had been collecting since the 1970s. The bonds had matured. The total payout was a little over $11,000. The Treasury withheld federal tax on the accumulated interests portion automatically, which came to about $1,100. Margaret had never filed a tax return on her own before. Her husband had always handled it. She did not know she needed to file in 2022. To claim that $1,100 back. The bonds were her only taxable event for the year, and her actual tax liability was zero because her total income was below the filing threshold for a widow her age. But if she does not file a 2022 return by April 15th, that $1,100 belongs to the Treasury permanently. Multiply Eleanor and Walter and Margaret by 1.3 million people, and you get $1.2 billion. So who exactly should be checking this week? If you are a senior who did not file a federal return for tax year 2022, and any one of the following happened to you that year, you are very likely owed money. You took any distribution from an IRA, a 401k, a pension, or an inherited retirement account. You worked any part-time job, even for a few weeks, where the employer withheld federal tax from your paycheck. You collected interest from a bank account that issued you a Form 1099 INT with federal tax withheld. You sold any investment that triggered backup withholding. You cashed out a savings bond. You received a one-time payout from a life insurance annuity, or a relative who passed away that year had a final pension or IRA distribution paid out in your name. In every one of those situations, federal tax was almost certainly withheld from the payment, even if the amount looked small at the time. And in every one of those situations, that withholding is refundable to you because most seniors who only collect Social Security have a federal tax liability of zero or very close to zero. But here is the catch, and it is the catch that traps almost everyone. The 3-year clock does not pause for any reason. It does not pause if you are sick. It does not pause if you did not know. It does not pause if a family member was handling your finances and dropped the ball. The IRS published a clear statement on this. By law, taxpayers have only 3 years to claim a refund. After that, the money becomes property of the United States Treasury. End of story. There is no grace period. There is no late filing window. At midnight on April 15th, 2026, every dollar that has not been claimed is gone. Now, I know what some of you are thinking right now, because I have heard it from every senior I have ever explained this rule to. There are 3 objections that stop people from acting, and I want to take them apart one at a time. The first objection is, I do not have my old paperwork. I lost the W-2, I never kept the 1099. The brokerage closed years ago, therefore I cannot file. This is wrong. The IRS keeps a copy of every single income document ever issued in your name going back at least 10 years. You can pull a free wage and income transcript directly from the IRS website in about 10 minutes. It will list every W-2, every 1099-R, every 1099 INT, and every other reportable payment that was made to you in 2022. You do not need the original paper. You need the transcript. The second objection is, it is only a few $100s. It is not worth the trouble. I want you to think about that for a moment. $686 is the median. That is roughly 1 month of groceries for most seniors. It is roughly half a month of rent in many parts of the country. It is enough to cover a heating bill, a car repair, or a Medicare copay that would otherwise come out of savings. The IRS is keeping that money by default unless you take one specific action. There is no scenario in which leaving $600 sitting in the Treasury is the smart choice. The third objection is, I am scared to file. I do not want to deal with the IRS. I do not want them looking at my finances. This one I understand, but I want you to hear me clearly. Filing a refund claim is not an audit. It does not put you on a list. It does not invite scrutiny. The IRS already has every document I just described. They already know what was withheld from you. All you are doing by filing is asking them to send back what they already owe you. The risk of filing is essentially zero. The risk of not filing is losing every dollar in 7 days. And one more thing. because almost everyone gets this part wrong. Filing an extension does not help you. An extension gives you until October 15th to file your 2025 return. It does absolutely nothing for your 2022 refund. The 3-year clock runs from the original 2022 filing deadline, and it cannot be extended by anyone for any reason. You might also be wondering where exactly this money goes after April 15th. It does not get held in a special fund. It does not get returned to your state. It does not get used to pay Social Security. It is swept into the general fund of the United States Treasury, which means it pays for whatever Congress decides to spend it on that year. Defense contracts, foreign aid, federal salaries, whatever the budget calls for. Your refund becomes indistinguishable from any other federal tax dollar the moment the deadline passes. There is no fund you can appeal to and no office you can call to get it back. So here is exactly what to do this week. Step 1. Go to irs.gov and search for prior year forms and instructions. Find Form 1040 for tax year 2022. Download both the form and the instructions for that year. They are free. Step 2. Gather every 2022 tax document you can find. That means W-2 forms, 1099-R forms from any retirement account distribution, 1099 INT forms from your bank, the SSA 1099 from Social Security, and any other 1099 you might have received that year. If you cannot find them, go to irs.gov and search for Get Transcript. Request a wage and income transcript for 2022. The IRS keeps a copy of every form ever issued in your name, and you can pull the entire transcript online for free in about 10 minutes. Step 3. Fill out the 2022 Form 1040 using the 2022 instructions. Not the current year version, the 2022 version. The brackets, the standard deduction, the senior add-on, and the rules are different than they are now, and using the wrong year invalidates the return. Step 4. Sign the return, attach copies of every withholding document you gathered, and put it in an envelope. Prior year returns this far back generally cannot be filed electronically, so you will need to mail a paper return. The mailing address is printed in the 2022 instructions, and it depends on which state you live in. Use that exact address. Step 5. Postmark the envelope by April 15th, 2026. The IRS uses the postmark date, not the receipt date. If the envelope is postmarked April 16th, the refund is gone forever, even if it arrives the next day. Do this for yourself if you think you might be on the list. But more importantly, do it for any senior in your family who does not normally file a return. Pick up the phone today. Ask them whether they took any retirement distribution, sold any investment, cashed any savings bond, or worked any part-time job in 2022. If the answer to any of those questions is yes, they are very likely owed money, and they have 7 days to claim it. After that, the IRS keeps it.